Hey everyone, welcome back to Corporate Decoder, the place where we figure out what all those boring corporate filings actually mean for you and me. Get ready because Planet Labs PBC is dropping some big news with a whole lot of numbers. Alright, so Planet Labs, the company that gives us eyes in the sky with their satellite imagery, they've just dropped a brand new report. This one's a big deal because it's all about them raising a ton of money. You know, companies tap the markets to fund their growth, and this filing tells us exactly how they're doing it and for what. So what's the big news? They've issued some super interesting financial instruments called convertible notes. Think of these as loans that can turn into shares of the company's stock. They've raised a massive $460 million with these notes that are due in 2030. Now, the most interesting part is that these notes only pay a tiny interest rate of 0.50% a year. That's incredibly low and tells us that investors are really betting on the company's future growth rather than just the interest payments. Now, how do these become stock? Well, for every $1,000 of these notes, you can convert them into about 8367 shares of Planet Labs common stock. This means if the stock price goes up significantly, it makes more sense for the note holders to convert them into stock instead of just getting their money back. The price at which they can convert is around $11.95 per share. This is a key number to watch because if the stock price trades above this for a sustained period, it becomes very attractive for investors to swap their notes for stock. This can lead to more dilution for existing shareholders, but it also sustained period, it becomes very attractive for investors to stock price trades above this for a sustained period. It becomes very attractive for investors to stop price trades above this for a sustained period. It becomes very attractive for investors to stop price trades above this for a sustained period. It becomes very attractive for investors to stop price trades above this for a sustained period. It becomes very attractive for investors to stop price trades above this for a sustained period. It becomes very attractive for investors to stop price trades above this for a sustained period. It becomes very Planet Labs also has the option to buy back these notes, but not before October 2028. If they do decide to buy them back, they'll have to pay back the original loan amount plus any interest that's due. There's a condition though that if they decide to buy back some but not all of the notes, they have to make sure at least $100 million worth of notes are still out there unless they decide to buy back all of them. What happens if there's a big change in the company like a merger or an acquisition? Well, if that happens, holders of these notes can demand that Planet Labs buys them back for the full amount plus any owed interest. This is a protection for the note holders in case something major changes the company's outlook. Now, it's important to understand how these notes stack up against other debts. They are essentially unsecured loans, meaning they aren't backed by any specific company assets. This means that if Planet Labs runs into serious financial trouble, other lenders who have their loans backed by assets would get paid back first. Also, any debts that subsidiaries might have are completely separate and don't directly affect these notes from the parent company. The report also lists out all the conditions that would be considered a default. This includes failure to pay interest or principal missing deadlines on important company notices or issues related to mergers and asset sales. If an event of default happens, especially a big one like bankruptcy or insolvency, all of the money borrowed through these notes instantly becomes due and payable. That means the company has to pay it all back right away. Let's talk about the money. After all the fees and expenses, they brought in about $445.8 million from selling these notes. Now, a chunk of that, around $39.6 million, was used to pay for something called capped call transactions. We'll get to that in a moment. The rest of the money is earmarked for general corporate purposes, which usually means funding operations and growth initiatives. So what are these capped call transactions? Well, this is a really clever move by Planet Labs. They essentially bought options that limit their potential downside if the company's stock price really skyrockets. Think of it this way, they convert them into stock. If the stock price shoots up way past a certain point, Planet Labs might have to pay cash to the note holders instead of just giving them stock. These capped call deals protect them from having to pay out a massive amount of cash. They're generally designed to reduce the dilution from these convertible notes and offset any extra cash payments they might have to make if the stock price goes through the roof. The cap price is set at $18.44, which is double the stock price of $9.02 on the day they announced this. This is a smart way to manage the risk associated with convertible debt. This section confirms that the notes were sold without being officially registered with the securities authorities. They were sold to what are called qualified institutional buyers. This is a common practice for large fundraising events like this, where the buyers are sophisticated investors who likely understand the risks involved. Any stock issued from converting these notes will also not be registered for now, which is fine as long as they follow certain rules. They expect this conversion process to be exempt from registration because they won't be paying anyone to help convert the notes into stock. This part of the filing is all about announcements they made leading up to this big fundraising. On September 8th, they first announced their intention to raise $300 million. Then on September 9th, they announced they were upsizing that offering to $400 million and officially priced it. These announcements are important because they signal the company's confidence and the market's appetite for their debt securities. And finally, they've attached all the essential documents for this deal. You've got the actual indenture, which is the long legal contract for the convertible notes, the form of the note itself, the details of those capped call transactions, and the press releases announcing everything. These are the official paperwork that backs up all the information we've discussed. So let's put on my Warren Buffett hat for a moment. Planet Labs is clearly in a growth phase and needs capital to fuel that, raising $460 million with very cheap debt. At only 0.50% interest is a huge win. It shows strong investor confidence in their future prospects. The fact that they used a significant portion of the proceeds to manage potential dilution through capped call transactions shows a smart and strategic approach to managing their capital structure. They're hedging their bets to ensure that as they grow and potentially issue more stock from these convertibles, it doesn't cripple existing manage. Potential dilution through capped call transactions shows a smart and strategic approach to managing their capital structure. They're hedging their bets to ensure that as they grow and potentially issue more stock from these convertibles, it doesn't cripple existing shareholders. However, there are always risks. While the low interest rate is great, the conversion price of $11.95 is a hurdle. If the stock doesn't climb significantly above that level, these notes might just stay as debt. Also, the company's success hinges on continued demand for its satellite imagery services and its ability to execute its business plan. The fact that these are unsecured obligations means that, in a worst-case scenario, other creditors could have priority. The key takeaway here is that Planet Labs is making a bold move to secure significant funding for its future growth, and they're doing it in a very cost-effective way from an interest rate perspective while also attempting to mitigate potential shareholder dilution. What's your take on this massive fundraising by Planet Labs? Do you think it's a smart move for their continued growth? Let me know your thoughts in the comments below. If you found this breakdown helpful, give this video a thumbs up and subscribe for more insights into the world of corporate finance. Don't forget to join our Discord community, linked in the description for more discussions. Thanks for watching, and we'll see you in the next one.